Today in this OJM webinar, we'll be speaking about captive insurance companies, powerful tools for asset protection and tax reduction. Of course, a couple of disclaimers before. My background as an attorney dictates, of course, that this is important. OJM Group is an SEC registered investment advisor. The information contained in this presentation should not be construed as personal advice for you. The only way to know if something that I'm discussing today applies to your situation is to have a personal consult. OJM is not engaged in the practice of law, and we do not provide legal advice. Always consult with an attorney regarding your specific legal situation. Before we get started, also, we want to make sure that you have an opportunity to get some of our books. We've been writing books for clients for over almost 20 years, 18 years when I did my first book. We have certainly plenty for physicians, and we've got a number of books for non-physicians, for business owners, entrepreneurs, etc., of which make up a significant number of our clientele. That would be the fortune building for business owners and entrepreneurs on the bottom right. You can see the different physician books as well. They're all free, and we'll tell you at the end how to get them. So, today we're talking about small captive insurance companies. Why would someone be interested in a small captive? In other words, what are the benefits that a small insurance company can provide? Well, there's a number of them. One is asset protection, a field I've been working in for almost 20 years. If structured properly, a small captive can be structured for a very high level of protection for the assets growing inside of that captive. Risk management, which in some ways is very closely related to asset protection. Asset protection is protecting an asset in case there is liability. Risk management is actually covering that liability with liability policies or defense-only policies. And risk management is fundamental to a captive structure because a captive is providing that kind of coverage to operating companies. What kind of risks does a captive often insure against? Well, in our experience, it's awfully often for uninsured risks, meaning a business or a practice has no insurance for these kinds of claims. For example, like embezzlement or an employee litigation or sexual harassment. Many of the businesses we see, medical practices we see, do not have any insurance for those types of risks. And certainly a captive could come in and provide that where it's lacking. A captive can also be used to supplement and move around your existing coverages. So if you've got product liability or you've got malpractice insurance, a captive can come in and insure where you have a deductible presently. So you have no coverage in that area. Or it can go on top of existing coverage. So you may have coverage limits. And what happens if there's a claim beyond limits? The captive can come in there. In fact, you might even use a captive to actually raise your deductible or lower your limits, so have less cost to third-party insurers, use more of the captive insurance, or I shouldn't say more, but use captive insurance to fill in those gaps and reduce your overall out-of-pocket costs there. Another area that captives can be very powerful is in the buyout and estate planning. So if you're in a business where eventually your plan is to sell the business or practice to younger members of that business or practice, you can think of a captive kind of like a building, an LLC with a building in it. As you're paying rent every year, you get income off of that. As the company's paying premiums every year, you're making income off of that. And then when you sell, you can have the younger owners buy into your LLC that owns the building, buy into your captive that's insuring the businesses, and it gives you another business essentially as part of the whole conglomerate to sell upon retirement. On the other hand, if you end up keeping the business in the family, or you could use it as an estate planning tool. And even if you don't, even if the plan is to sell the business internally or externally, you can use an estate plan, especially, a captive, especially if owned by trusts or other estate planning type documents, to build into your estate plan a tremendous option to do some powerful planning in a real leveraged or financially advantaged way. Then finally, a significant benefit of small captives is the special tax treatment they've gotten under our tax code for almost 30 years. 831B, this code section of the Internal Revenue Code I referenced, has been there since 1986, so almost, we're about, 4 months away as I record this, from this being 30 years in the tax code, which is pretty long. And what that tax section says is that a company that qualifies and under this code section, and there's a number of things it needs to do, and it takes in less than $1.2 million of premium per year, up to $1.2 million of that premium is not taxed. So there aren't really many opportunities in the tax code to own a for-profit company. That's not a charitable, that's a real company, that's businesses to make money that you can own, where the income on that entity is tax exempt. And here you have that up to $1.2 million per year. Very powerful. So that, along with these other elements, you can see how this could be, at least at a high level, attractive to many successful professional practices and other types of businesses. I mentioned the code section. Under that code section, there are thousands of companies operating and filing as an 831B small insurance company today. And there's actually been changes in the law over the last 15 years. I've been working with these companies for almost 20 years, and I've seen the law be get more defined, which is very helpful for those in the business of doing this and creating and maintaining these companies. The more rules you get, the better you can navigate and make sure that clients are doing this properly. And we've seen that in the code in 2004. We've seen that with private letter rulings, revenue rulings, and other authority from the IRS, and, by the way, also from the state insurance commissioners. When I started working with small captives in the late 90s, we used to set them up almost exclusively internationally because there wasn't a good mechanism to do them in the states and keep costs reasonable. Well, the states have gotten into the game over the last 15 years, and there's probably a dozen states that have now captive subsections of their Department of Insurance, which allows clients to set these up in the U.S., and very few of them to set them offshore today. And because of that, the state insurance commissioners, who actually have a lot of oversight over the insurance companies, these small captives, really can give a lot of guidance and keep the insurance companies in their jurisdiction doing things properly. Yet, with all that authority and with all of those new regulations and new, the federal and state governments involved, there is abuse. And while some of that abuse may be still going on offshore, it's happening in some of the states as well. And the IRS has recognized that. In fact, in 2015, they came out with a notice that said, essentially, there is significant abuse of this legitimate planning tool. And so it put the industry on notice that it's a legitimate planning tool. It's in the tax code. State insurance departments are giving licenses and maintaining and re-upping those licenses. So there are people who are doing it properly and doing it well, but there's also folks who are abusing it. So I don't think there's any time that I've been doing this for the last 18 years where it's more important to get the right team involved to do this for a client, because if they don't do it right, the IRS is out there looking for people who are abusing it. If they are doing it right, they should get all of the benefits that a captive can afford. So visually, what does a captive look like? Well, it's setting up a company that by its nature will insure related companies. So here's an example of a practice. It could be a law practice where the owners of the law practice also own the captive. The captive provides insurances, different coverages, could be 5, 10, 15, 20, 25 different insurance policies that are drafted and offered by the captive and purchased by the practice gets coverage for those risks, and like any other insurance, the practice pays the insurance company for those policies and premiums. And if it's done properly, and that's a big if, the practice should be able to deduct those policy premiums just like they do for other third-party insurance policies, get a deduction to the practice, and if that captive is properly maintained under the rules regarding 831B small captives, then it should not pay tax and up to $1.2 million of premium per year. So you have an opportunity to get some tax benefits at the business and tax benefits at the captive level, and owned by the same or similar, doesn't have to be exactly the same, owners of the operating businesses. Now, what types of policies make sense for your business or your practice? Well, not really the role of OJM, but I can tell you as a firm that's been managing assets inside of captives and seen what the insurance managers, actuaries, and attorneys have put together, drafted policies. Again, it can be policies that deal with business risks that the business already insures by putting deductibles in and excess losses. It could be a whole host of policies that the business has no coverage at all. Loss of key person, loss of salesperson, seen key embezzlement policies, I've seen product liability policies, economic type factors, licensing, professional risks, all sorts of different risks that are typically divvied up among 10, 20 different policies. And often liability defense only policies. So what we don't want to do is make the insured business or businesses a deep pocket that gives them more risk that somebody will come after them for liability. So you often see policies that are really there to cover defense costs, but not liability to third parties. That's important. And it's what I think a lot of lay people think of as a Lloyd's risk. You might think of them as esoteric, but they're risks that happen all the time. And one of the key things I think that the attorneys who set this up will say is we want to have risks that you're going to incur a claim on, that there's going to be a payout on. And doesn't mean every single policy is going to be a payout, just like you have life insurance, and if you're listening to this, it hasn't paid out because you're alive. Doesn't mean that every policy needs to pay out, but it also means there needs to be some real risks there that will be paid out over time that you think you might have some kind of claim on that. Comes to mind a client that recently claimed on an embezzlement policy. They didn't want it to happen, but they had something go on in their office place, and they were able to claim on that policy, whereas if they didn't have a captive, they wouldn't have had that coverage. I mentioned getting the team today is more important than ever. The key people on that team are the law firm, the insurance manager, and the actuarial firm. The law firm likely will handle all the formation, tax treatment, legal issues. Often there's going to be legal documents related to the captive, like a trust owning it, or an LLC, or a shareholders agreement, or a buy-sell agreement. You need to have a law firm in place. And I think it's important to keep that attorney-client privilege throughout the process as well, which, again, coming to someone who's a former attorney, probably not surprising. I think a law firm should be involved. The insurance manager is probably the most important firm on a day-to-day basis as things go forward, because the insurance manager, licensed in the state where you create the captive, is the one making sure that all of the ongoing compliance from audits to business plans are in place, interacting with the State Department of Insurance. And so that's a crucial element of the team and probably most important going forward. Actuarial firm, though, is absolutely important, especially for the tax treatment of those policies to the operating company or practice. If you want to get a deduction for those premiums, they better be priced right. They better be priced independently, not with some kind of wink-wink trying to get to a deduction. And so, you know, the team or teams that we've worked with in the past that we have confidence in are using independent actuaries who are very well respected in the business and do a lot more than this kind of work. Our role at OJM, we take a lot of pride in, I think it's very important as well, is to manage those assets. We're a money manager that specializes in working with captives, and we've been doing it, at least I've had experience with captives for almost 20 years. And this is crucial because you've got 2 or 3 different levels. You've certainly got what the client wants to achieve and getting a good balance between risk and return. But that's true of all of our clients. We manage over $300 million for physicians individually, for business owners individually, for families inside of LLCs and protected entities and qualified plans. So we have lots of different types of clients that we manage assets for. But what's also important, and they all want to get good returns relative to the risk they take. But the other elements here for captive are, one, the tax element. And so, to get the tax treatment you want, it's important to have these assets in a captive managed for a tax point of view, because while captives have a terrific way of getting the dollars in, they're not as good once the dollars are inside in reserves, and we want to make sure we manage those to minimize the tax drag on them. We have a lot of expertise in doing that. The second level of importance is that the insurance departments have very strict rules on how they want to see a proper captive managed. And so that comes into play too, making sure that the captive management, the assets, are going to fit the business plan, are going to make sure that the captive is still going to get its license and not be overly aggressive there, that it's managed the way insurance companies should be managed. And so that's an element as well as time horizon, which is also important too. Is this something you're looking to do for the long term, short term? Do you own it? Do you have trusts own it, et cetera? A lot of different factors. The other area that OJM Group plays a role in is sometimes these captives can sponsor a benefit plan, qualified or non-qualified, and even look at the economics of different exit strategies. So we really understand the numbers and have pre-made spreadsheets that fit captive roles, and we can really educate the client on their different options on how they may shut down the captive in the future, and really look at the entire life cycle. Because we've been there. We've had clients set them up, enjoy them, shut them down, and there aren't many folks in our field who have seen that and have that kind of experience. So conclusion, again, we just hit the tip of the iceberg today. Does your business or practice have litigation, economic, regulatory, or other risks not covered by insurance or present policy exclusions? I can tell you, whether you're a medical practice, whether you're a medical manufacturing firm, whether you're a real estate firm, a law firm, a retail company, you have those risks. I've never seen a company that doesn't have risk that is not insuring today. Even my business has plenty of them. The question is, does a captive make sense on sort of a high level? First, you've got to have enough revenues to justify it, because captives can be expensive to maintain. I would estimate about $70,000 to $100,000 to create a captive, and about $70,000 or more to maintain it per year. So you want to be able to take advantage of it in a significant way. So the question is, does your business or practice generate $3 to $5 million in revenues or more? Anything above 5, it probably makes some sense. Above 10, starts to become very attractive. And even at 5 million, it can be very attractive. And so the question is, would you be interested in a tool that provides the risk management, that provides the asset protection, that provides the recruitment or exit strategy, or even estate planning, and also has this potential tax benefit? And if you are, we'd be happy to chat with you about it. Now, a little bit about us. Today we drilled in on one topic, small captive insurance companies. But you can see that's just one part. If you look at it under corporate structure, you can see captives at the bottom of that column. That's just one area of that we help clients with. So it is one part of one discipline, and we help clients with a whole host of disciplines, from asset protection to wealth management and everything in between. And we'd love to chat with you to see if we can help you with in a comprehensive way, which we do for some clients as sort of the quarterback, because we have experts in all these areas, or just in one area or two. It really, we customize it based on what it is you're interested in. So we're pretty unique because we have a consulting side of our business in addition to the other divisions, which are insurance benefit planning And there we look at life insurance, disability insurance, long-term care insurance, qualified, non-qualified plans, fringe benefit plans. We can look, and part of our process with some outside help, we look also at property and casualty insurance, which is includes captives, but also third-party insurance on your homeowners or umbrella or malpractice or general liability policies. So it's pretty unique that we can do that on consulting and insurance benefits and wealth management. We have over 1,000 clients we've worked with in the different divisions in 48 states, so we're really, truly a national firm. We can look at just personal planning, and we do that for plenty of clients. We can look at a business and just look at the business planning, or for clients who own their own business or practice, we can look at both. And on tax element, I think one area that's really unique on our consulting side is we have something that's called our firm commitment, which is if you're a qualified client, you have a certain level of practice or business of income and tax payments, that if we are working with you at the business and tax element, tax planning is part of what we're going to look at, then we can offer you our firm commitment, which says whatever fee we charge you, if we don't save you at least 200% of that fee in savings on the tax side or employee benefit sides, we'll refund the fee. So very powerful way to work with us, because we're really giving you a way to have a minimum ROI, and it's a pretty significant number. Love to chat with you about that. So in terms of next steps, we'd love to get you copies of our book. If you're a physician, we have some books for doctors. If you're a business owner or entrepreneur, we have books for you. We'd be happy to get you those. So the easiest way to get them for you is just to go to our bookstore online, which is OJMbookstore.com. And you can see different price points, and believe me, you're going to get them for free. So you'll see the book, whatever book you want. There'll be a price point, but as you go to checkout, if you use the webinar code, which is WEB0815, WEB0815, which you can see there, if you use that at checkout, you'll get the book for free, whether it's in hard copy or Kindle or iPad form. We'd encourage you. Also, free consults. We are interested in chatting with you and seeing if there is a fit. It's as much for us to figure out, can we help you, as you're figuring out, are we possibly the right firm for you? And typically we have a number of conversations before we determine if we're going to work together. We'd love to start with that free consult with you. So you can email me at mandell@ojmgroup.com. You can go to ojmgroup.com, and there's a free consult button there. You can call us, the toll-free number on the screen, give us a buzz, and set that up as well. So we hope to hear from you and would love to have that free consult. Thank you for watching. As always, we'll have another webinar next month, and appreciate you being on the webinar today. Thank you.